Morning, everyone. Hope you're having a good day so far. Welcome into the live stream. I just wanted to kind of get in here and give you guys some updates as usual. So last week, the downside trading plan was obviously more preferred towards the second half of the week. We had a plan to watch what was going to happen at the key level, which was the dual zone we were talking about at the 5,055. We obviously broke that level and also at the same time started moving further down. So that was a big part of last week's move. Now, obviously, if you guys have read the headlines and stuff, you would know exactly what's going on with the market. And I've mentioned that a couple of times around here. Just very quickly, can you guys hear my voice on the stream? Very quickly. I don't know if you can. On the stream? Yes, you can. Okay, that's cool. Just wanted to make sure that that was working. So we come all the way down here to 49.25 now. And this looks like a pretty decent level for a bounce play. Also, I'm going to get into another part of the market here, which has happened in the past. If you look at the S&P 500 chart, from somewhere in July 2023 all the way to November 2023 was where a correction happened, a corrective wave happened. And you can see that's the same time that the 10-year yield here popped out, right, of its down or sideways channel / moving into an uptrend. The same exact dates, 25th July all the way to 10th November. And the same thing is happening now again, where the 10-year yield is moving higher again. So if we break out of 4.875 and then above this 5% on the 10-year yield, that will be an issue. But as of right now, this push to the upside on the 10-year yield it looks quite normal to me so far. And on the SPX here, obviously this level that's sitting right beneath us is going to become a key level of demand, right? So this 49.25 roughly, right? 49.22 all the way up to 49.60. This is a demand zone. We had a pretty decent bounce on the 4-hour here, and it hasn't been able to push further down. But today, and the plan for this intraday session is to watch this key pivot, which is at around 50.20. And if we are able to break above 50.20, then we are likely going to head back to the 5100 level to grab some more liquidity. So that will be the level that I'll be looking at. It's either here or back up to here. So that's what I'll be looking at for the upside pivot. Now, if we're looking at a downside continuation extension, we're looking at a rejection of 50.20 here. That would lead us to a further downside extension, right, and continuation all the way down. Now, I don't specifically think that will happen right away because there's a lot that has to happen before that. So we will probably move sideways for a little bit and form a much bigger kind of bear flag-ish movement, just like the last time that we had it back in July all the way in November. We had the same movements that were employing the market to have a corrective wave downward. And we're seeing the same thing now in terms of the 10-year yield, pushing the market into the direction that we have, forecasted, so to speak. Now, if you look at the NASDAQ, you can see a pretty, different story that's painted here. First and foremost, this breakdown that happened last week was a massive breakdown that we have been waiting for a while, right? Clearing some of these pivots, this liquidity from the buy side, that was engineered, and now NASDAQ, if it can come back down to the 61.8 retracement, which is at 16,795, then we can potentially get a bounce back up into the upside here for some better positioning. So I'll be looking at NASDAQ as more of a bounce play more than anything at this moment. I like that for the upside. Just giving you guys a little heads up. Let's see, okay. Now next, The 10-year yield still has some room to go up into the 4.8, 4.9 level. And then remember that the 10-year yield spiking is also going to cause significant pressure on small mid caps. It's going to cause some significant pressure on semis, which you have already seen got completely destroyed this past week. And we saw a pretty straightforward sector rotation, out of a couple of sectors. Let me show you right now. I just posted on Discord a couple of minutes back. And so the sector rotations for most of Friday and Thursday, you can see that some money has been moving into utilities, energy, financials, and money has been flowing out of your technology, communication services a little bit, and consumer cyclical services. Now, semis make a big part of technology, so it's going to be one of those hyper-responding sectors because of their high beta, as usual, and the riskiness of their stock, plus it's cyclical, right? But the sectors that we've been seeing strength with are financials, which have been bouncing quite a fair bit, and then utilities, which is a sector we've been talking about for 2 weeks or so now with the breakout, right? And then it came back down to retest. And now a potential other breakout. So if you didn't take this one, you still have time on it. And remember, the proxy for this trade was NEE, right? We spoke about the upside on this trade. And then there is also a nice potential engagement trade on consumer defensives. Now, this one's a bit more difficult to play because it can actually be a upside downside trade. Like it's either one. But I like the breakdown and retest here. If we can get a continued rejection, then this will see $72 in the next couple of trading sessions. So I'll be watching this pretty closely as well. Lockheed Martin, I think I have spoken about this one on more than one occasion. Broke out last week. I told you guys about it. That trade was up over 40%, and I have some runners that will hopefully push it up even higher. I think on Friday we had a announcement that the Pentagon approved a $28 billion budget for a couple of defense contractors. LMT is one of the winners, right? And then we also played out the idea of net, right? This was another trade idea that went really well last week. Honestly, last week was a really great week. We had the breakdown, the rejection, and then the continued sell-off all the way down into the 61.8 extension. So this is a nice little trade that played out last week, and pretty nice risk-to-reward ratio on that one. So pretty happy with this. And then you had stocks like ARM, which are down, they were down like 16, 17%, trading like, literal shitcoins. And Tesla, down another 3%-ish this morning on Tesla cutting prices across the board. You have cut of prices for full self-driving as well. So looks like Tesla's as moving according to the flow that we saw a while back, and is very, very likely to touch that 130s level. Once again, as I said last live stream, and I'm saying it again, this is the time. If you want to own this stock, you can sell, puts, cash secured puts, you can buy the stock outright. This is not a bad price to pick up some. Every time Tesla has crashed like this, it's followed by waves that are a little higher, and ultimately it retraces and makes back most of those gains. So this is just not anything else but another buying opportunity in the short run if you are a long-term holder, right? Now, there's not much other tickers that I'm looking at right now. Mostly this week is going to be me being very selective with setup options. One of the other setups that I do like this week is DraftKings. There's some bad news surrounding this stock, something about how it's not managing its risk properly around bets and stuff. I would be looking for a potential breakdown, but once the breakdown happens, I will be very, very careful to wait for a push far above this before taking the short position. There's going to be some manipulation around this stock. So be aware that this stock is likely to see a push down and then a buy up before the actual move down happens. So I'll be waiting for that before anything. And yeah, that's all I have for you guys. Now, semis obviously are one of the ones that people are going to be keeping their eye on. And my analysis on SMH for time being is if it doesn't bounce where it is right now, which is at $200, that and go back up to the 220, 212 for a retest, right? Then semis are unfortunately hitting further down into the 177 to 188 range, which is this range here. And the simple reason for this is because you need to understand the fundamentals of semis. They are a cyclical sector, and you will have a bunch of chips that are going to be announced in the next couple of weeks / months. NVIDIA and AMD are going to be coming up with their own chips, and this is going to cause another boom bust cycle where there will be a bunch of buying and selling, and that's going to cause some issues for the semi market in general. So volume is really low for some reason. Oh, I'm sorry, I can't really do much. I think that's like the max my mic will take on my laptop. So I'm on my laptop today. But yeah, if you have any questions, drop them down below. I'm happy to answer if you have anything which relates to the market. But see the similarity between the S&P 500 and the 10-year yield between July and November last year. It's pretty uncanny what happened, and the same thing is happening now again. So I wouldn't be surprised if we get this kind of, sideways, boring chop where we're going to get a couple of waves up and down and up and down. And then eventually, once we come to touch this trend or try to break it, then we get a buy after that. Ending the year after the presidential election. For those of you that don't know, we are down 6% from the top, 6 point something percent, right? Which is a very normal correction. 5% is normal, 10% is normal, right? Versus Tesla, which since the start of the year is now down 53%, right? So if you are a long-term holder, like a long-term investor, and you don't mind putting out some risk, Tesla is a great long-term investment right now, right? You can buy it at this price because it's slightly undervalued and has that high beta to offset the risk that you're taking on in investing into this sector or the stock. So if you liked it at $200, you might as well add some more at 135, which is where it is right now, right? That's my logic. All right. So that's all I have for you guys. In terms of positioning for S&P 500, remember, we are waiting for a bounce here. That's my main logic here. This move last week was pretty good. We need a little breather to digest some of this price action. Remember that we have big earnings reporting this week as well. Okay, what are the earnings that are reporting this week? I'm glad you asked. Let me pull up the calendar. So this week we have let's see. Today it's mostly some banks, right? Tomorrow starts the fun. You have GM, UPS, General Electric, PepsiCo, Lockheed Martin, which I have a trade on, which I will exit before the market closes. Spotify. You have after the market close Tesla, Visa, Enphase, Texas Instruments. The next day you have Boeing, AT&T. Then you have Chipotle, Ford, IBM, Meta, ServiceNow, Lam Research, Align, Vail. And then Thursday you have Royal Caribbean, you have American Airlines, you have Altria, Caterpillar, Southwest. You have Microsoft, Alphabet, Intel, Snap, Roku, Western Digital, T-Mobile, Gillette. And then Friday you have Exxon, Chevron, AbbVie. These are all healthcare / oil plays. Now, my view is the market's not going to really make a move until the big tech reports. So I think that if anything, what you could expect here is a consolidation of price action for the next 1 to 2 days, all up into Thursday perhaps. And then after the big tech reports, the market's going to choose a direction and move, because this move down was mostly on speculation. And so remember, the market's pricing in new information on this move down, and then once that information gets revealed, it's either we, kind of make this bear flag, like going like this, right? And then fall further down, or we have that bear flag, and then what happens is that price action moves further higher to go up and grab some liquidity from the 5150 region, or maybe even from the 5080 all the way to 5113. So that's what I'll be looking at in the next few sessions on the SPX. For me, it's very simple. In order for me to take a bullish trade, I have to break clearly and firmly above 50.55. This is my land in the sand for the bullish trade idea. If I want to make a bearish trade, then I have to either reject this very, very hard, or I have to reject one of these upper pivots or break the lower pivot at 49.25 for us to see further downside and for bears to secure this fully. So I'll be watching that pretty closely, and yeah, that's pretty much all I have. I mean, it's a pretty straightforward week. Don't overplay your hand. Massive earnings going to be coming out, so don't take any trades that are high in risk. It's not going to do well. Tesla selling now to boom during earnings. Yeah, maybe. Who knows, right? I mean, you never know these things. But yeah, I hope you guys have a good trading session today. And it's obviously, as I mentioned, volatility is back in full swing. So have fun with trading both sides of the market. This is where you can literally do so, and I wouldn't shy away from it. Right? It's an environment where you can actually make more trade ideas. You can have better flexion and just general flexibility in choosing ideas too. Now remember, over the next couple of sessions, you should have a bias towards looking for bounce trades in sectors. And the sectors that the market's kind of favoring right now are the stable bandwidth, the stable balance sheet companies that are doing well. The high growth, high beta stocks are out the window for now. And anything that is risky is also out of the window for now. So pick your choices wisely and don't go take things that you wouldn't trade on a normal trading day just because you think that the market's going to move unnecessarily. So be smart with your decisions, and yeah. Earnings can go either way, lol, from what you're hearing and seeing, though. You think Tesla will beat earnings? No. I didn't say anything like that. I don't think Tesla will beat earnings. I mean, it's always a 50-50 bet. But, I mean, what can you expect from a stock that's so beaten down is my view, right? If something is beaten down and in expectations badly like this, then even the smallest amount of good news will set the stock in the opposite direction. So that's the reason why I was mentioning that there is a possibility for Tesla to have an intraday pop or post-earnings pop. That's it. But anyways, that's all I have for y'all. I will catch you